Master your emotions, master your risk smart, win big.
What's up everybody, welcome back to Royal Blue Effects. In today's video we're going to talk about the 100 proven ways to read market direction. Now I know this is a little bit clickbaity, right? We're not going to actually show you the 100 ways to show you direction, obviously, because that'll be way too long of a video. However, we will talk about the 3 ways that we actually identify market direction, and these are the most proven ways to show you how the market direction moves. Okay, now we're going to start with the first one. The first one is essentially supply and demand. Okay, everybody knows supply and demand. I think for most of you guys, I think most of you know supply and demand. However, we're going to show you a quick example, right? So a lot of you know this is higher highs, higher lows, right? It's essentially just structure. Supply and demand is a structural based proven method, right? So the reason why this works a lot, right? Now this is supply, obviously. Demand is quite the opposite, right? The reason why this works a lot is because this is where a lot of orders are placed, right? A lot of people are waiting for prices to rise back to a supply to sell, vice versa, to go right back at supply to sell again, right? And continuing bullish in this case, right? Waiting for buyers to continue waiting for price to come back to a demand, right? To continue bullish, right? So forth and so on. However, this isn't all you need to know though in terms of direction, because a lot of times there is a little bit more in terms of a little bit more work to show you where exactly price is going to fall into. Say for example, let's just use this demand, right? For example, right? Because a lot of buyers are waiting to buy here in these areas, right? Not everything is created equally. You're not necessarily going to get price coming down to these areas all the time. However, we can use this as a base model, right? Supply and demand can be used as a base model. What does that mean exactly? Well, it's like a skeleton, right? So you identify the higher highs, higher lows, right? And that is sort of your base and your scale and your model to follow. So there's a few things that can happen within these within supply and demand, right? We know that price can also, when price retraces, price can come and sweep a low, right? Because there are a lot of traders that wait for these expectations, like supply and demand traders, like myself, obviously. However, there is a lot to also think about here. Whenever you're looking to trade into supply and demand, right? Not everything is just plain old structure, right? Not everything is just plain old structure in terms of thinking how the market moving in a mechanical way, right? Prices also move, or this market moves also in a psychological way, right? So you have to think about this. When price comes into a demand zone, there's going to be a lot of traders waiting to buy on a demand zone, right? But being that we're humans, we have to also think about the psychology aspect of this. So when people are buying here, prices also come and do what? They sweep a low, right? Similar, and the reason why this happens, obviously, because a lot of people are expected to buy in these areas. Now, this isn't entirely wrong. However, as traders, we need to have an open mind when we are trading supply and demand zones, right? So this is a very mechanical way of trading. Mechanical way is simply just higher highs, higher lows, right? You could probably put a sell limit here, wait for prices to come and take you in, right? However, what if those prices don't actually, what if the market actually doesn't even do that, right? What if prices come here, right, again, and just sell off, and you're tapped in your trade, price goes against you, and then continues bearish, right? Now you lost the trade, right? Simply because you are thinking mechanically. You're not thinking psychologically in this case either, right? So this goes on to say, actually, and talk about our second way of identifying direction. Okay, the second way is essentially the sweeps of the lows, right? A previous old low or a sweep of the previous old high, something like this, right? And the reason why, again, this goes to show you why this happens. Because there's so many traders that are expecting to sell here at a supply zone, price goes above an old high. Let's just even do this, right? It does this, right? It tricks everybody in, collects in the orders, right? Takes everybody out, right? And then continues bearish, right? So this is the other proven way. Now, this is powerful because this is the number one. In fact, this is the number one strategy, the way we identify direction, okay, is simply because this is where the big orders are, right? This is where the big move comes in. And I'm pretty sure a lot of you have identified this. Now, a lot of you guys will say, yeah, well, obviously, duh, look at, there's liquidity, right? There's your relative highs. Yeah, sure, that makes sense. Yeah, you can find the liquidity, but also liquidity isn't always swept whenever you are waiting for, expecting, right, for liquidity to be swept, right? So there's that expectation, right? But then you can also anticipate it, you can also predict it, whatever you want to call it, right? That's why, and I'll talk about why specifically supply and demand zones work very effectively. Well, it's because each supply and demand zone, there is a swing low or a swing high involved in each high and each low, okay? Let me just kind of quickly go down here, and I'm going to stay on topic, right? We're going to talk about the third one in a second. However, the reason why supply and demand zones work so effectively is because the very nature of supply and demand, right? When supply and demand is created, let's just say we're going to talk about a bullish example in here, right? When prices are going bullish, you see there was a bunch of liquidity here swept. That's supposed to be a dollar sign like that, right? So now, naturally, okay, when people are looking to go higher, right? Traders wait for the market to come back to a demand zone, right? So this is a demand zone. Let me make this just a bit better. Maybe let's go even make it a better drawing here. I don't want to be looking like a schmuck here with this. Okay, so this is what happens, right? Prices rise, right? Just like this. Okay, prices come back to a demand zone right here. This is the low that swept this previous liquidity, and prices run back higher. Just like this. Let's put this over here. Something like that, right? Liquidity is swept, right? Boom. Now, we all know that prices, in order for price to move bullish or bearish, right, we have to obviously identify liquidity. In our courses, we teach how liquidity is just a given. It just happens. You just need to find the needle in the haystack, which is really your supply and demand zone. Which supply and demand zone do you play? Do you play the internal or the external, right? So we'll stay here on topic, obviously, but here's why supply and demand zones work so effectively. Okay, when prices come back, they're coming to mitigate the demand zone. The demand zone that actually this low here, right, that actually swept all the liquidity. So when people are buying, right, when the market's moving, right, this is where the banks have left an unmitigated area, right, a zone where also the banks are negative, right, so they have to come and mitigate their negative position to continue price bullish. So having said that, right, not every supply and demand zone is equal, which means that if we do now expect for prices to retrace, right, a lot of people can anticipate it, predict it, expect it, whatever, right? Wait for prices to get back to this demand zone. A lot of traders will say, okay, well, hey, this is a demand zone, right, where price swept, right, liquidity ran. Now we're expecting for price to get back here, which is very true, right? But we also have to expect that price can also fake a move up like this, come and sweep an old low like this, right? Because demand and supply zones can be mitigated twice, more than once, right? Can sweep the low like this, run the high, come back, and then continue bullish, right? So naturally speaking, when you are looking to trade supply and demand, right? When you are on your candles, candle pattern chart, right? Naturally, you'll see that candles are sweeping the low, right? Like there's a big wick that comes right below, continues right bullish, right? So it looks like price is irregular here. You can see there's higher highs happening, right? And then you can see order flow, being steady right here, right? This is where a lot of traders are also doing, your so-called trend lines here, obviously, your break and retest, maybe, whatever. Prices, people are trying to sell here, prices go against everybody, right? Something like this. However, all right, when you select the line chart, the line chart will simply show you that prices were within this demand zone, right? Now, this is why I use the line chart a lot too, just to identify what price is trying to do, right? To confirm whether the body closed below this low, and if it did so, the line chart will show me that, right? The line chart won't lie. The line chart will show me that there's a body close below this low, which means that we may also be continuing bearish now, that prices may not continue bullish. Okay, so without getting too far, obviously, this will be another topic for another video, of course, but to continue here, right, you can see that the first method, right, supply and demand, just your normal average supply and demand, the identifying market direction is typical here. We can expect this, right? We can expect the flow, right? Our second strategy, right, is expecting a sweep of the old low or a sweep of the high to continue market direction, right? So obviously this is the other strategy that we're talking about, right? So it sweeps out this, right? Sweeps, continues. This is our confirmation, the chalk, the change of character, wait for prices to come back to the demand, right? Because we know that prices are bullish, to continue bullish. So we'd enter right at this demand, like so, right? Just like this, right? Boom. All right, the third way I want to talk about is very simple. The third way is really just an area where prices are showing us the momentum, right? So let's just talk about momentum, because momentum can be seen in many ways, right? And why do I have momentum as the third one? Well, it's because momentum shouldn't be the only way you find direction, but momentum can be continued from a previous supply or demand zone or a previous sweep of the low or the high, right? Again, let's just talk about it here. There is your demand zone right here, right? So when prices come to mitigate a demand zone, what happens in between, right? What happens from this demand zone? What happens? Well, the momentum's rising, right? We've either swept liquidity, right? So which means the momentum is kicking in. We're using the momentum from price action, right? We're also using, right, the liquidity's momentum, right? So there's also liquidity, right? I mean, you can see it right here. There's liquidity sweep, right? And then mitigating a demand zone. You also see the liquidity from the external low, the old lows, liquidity being swept, and we're using momentum from that, right? So now that we've used the liquidity from here, right, you can start using the momentum in here, right? Now this means, because we know this is a locked in position right here, like this is all locked in, right? It's like confirmed already. You can start using structure internally, right? Just like this, right? Now we know we can get into these entries just like this too, right? Because we have a sweep of the low, right? Here's the sweep, right? You can see the sweep happen. You can enter from here if you want, obviously. Here's another break, another sweep, right? This is where you can just get in positions just like this, right? Now eventually price is going to overextend, right? Be overbought, right? But this is just to say that momentum is also key in finding the direction. Okay, these are the three most powerful ways that we find direction. Okay, and so I hope you guys understand these examples. But we're going to go right now to a live chart example. All right, so here we are on a live chart example. So first things first, right? You can see that there's demand going up, right? You can just see it all too clear. Everything's pushing bullish, right? But we're just going to start on a 30-minute. It doesn't really matter what time frame you start. Everything is really perspective based. Right, so even if I'm on a 1 minute, I can still look at structure as my so-called higher time frame, right, or higher time frame structure, right? So because I'll be entering on the 1 second, right? So it all matters. This all matters based on where you are in terms of how far you are from your entry time frame. Okay, so in this case, we'll just start on a 30-minute, just because. All right, so what we see here is, the first things first, we see a sweep right over here. Okay, so this to me signifies that this is a demand zone. There's two things here. This is a demand zone that is strong because it swept liquidity and it left, right? And it never mitigated. So what I'm anticipating is for prices to come back to this demand zone right here, right? So obviously anything can happen, right? Price doesn't always have to come to supply and demand zones. However, we anticipate it. We wait for these things to happen, right? You can also simultaneously start looking to take entries going bearish, right? But we're not going to do that for the sake of the video. We're just going to stick with the with this, right? All right, so here's what's happening. We came to a demand zone, right? First things first, a lot of people are trying to enter here now that everyone's trying to buy, right? Because it is at a demand zone. You know, one of two things can happen here. Now, this is where our psychological expectation needs to come in, right? Is to say, because this is technical and everybody knows that technical and mechanical, everybody knows to buy at a demand zone. Everybody knows to buy at a low and sell at a high, right? Well, it's not all 100% true, but it is in some cases, right? To some extent, it is true. However, once we get here, we can start looking for confirmation, right? Just to look to see if prices go bullish. So if prices get to a demand zone, right, my mechanical side, right, is telling me look for confirmation once price taps the demand zone, right? So that means a sweep of liquidity, right, chalks again, chalks and then continues bullish. Another side, right, is my my psychological base is if prices continue bullish, right, and then start going bearish, right, expect for this low to sweep, expect for this old low to also sweep, right? It can either take out an internal low and then do this, right? So it'll take out the old low just like this, right? Just like that, and then chalk above, right? We're always looking for the chalk, right? And then wait for price to come to a demand zone, right here, right? To then run bullish. Or it could obviously come and take out the old low, and that could look simply like this, right? Just like this, take out the old low, sweep the liquidity, run a chalk, run the high, right? The old high. It doesn't even have to be this high, right? Or this high, honestly. It could honestly just be something like this, right? Something like that. Excuse me, yeah, something like this. Let's just make this a little more simpler, right? Something like that. Comes in like this, all right? Let me just draw this here, right? To do this, then to do this, then to continue bullish. Now, you might be asking me like, okay, what's happening here? Okay, so let's just reiterate what happened here. Price came all the way to this old low, which is liquidity, right? And then we expected to change a character. Now the change of character is here. Took out the low, it chalked here, right? Came out to this demand zone. People are starting to buy because they're starting to come in first in. I'm second in. Second in means that we have to see failed supply, a supply that never broke the low, to confirm that this demand is holding. And then we are second in. That means we find that this is a failed supply that did not break this low, reversed back up, swept internal liquidity here as well, came back to the demand, right, to then continue bullish. That's exactly how we see this, okay? These are all the scenarios that can pan out, right? So in this case, let's see what happens, right? We have this, right? It's holding here. I'm just watching price now as price is going bullish. You can see that this is a supply zone that a lot of traders are waiting to sell on. I'm not going to do that. There's a bunch of liquidity up here as well. This is a swing high, which means there are other traders that could look to short this from here as well. But we're not going to trade against the trend. We're going to go with the trend, right? So, and this is how you find out the market direction. Nothing is happening here at the moment. People are selling here at the outer part of the zone. We're going to see if people are going to try and sell the inner part of the zone, about the 50 EQ, right? You can see there people are trying to sell, right? So we haven't had yet any confirmation so far, right? But that doesn't mean that we can't continue. Just because price is up here at this point in time doesn't mean we can't take advantage of the move, to go bullish, because right now momentum is pushing bullish, right? That's the third part, right? So we have momentum pushing bullish. I do expect, and I would love for prices to get back to here if this low breaks the internal high, right? So that's what I would love to see. But anything can happen. Let's see what happens. Okay, so we haven't even swept the high yet. There's no sweeping of the high yet, right over there, right? But here we get some indication. Okay, so here's what's interesting. There is a selling pressure coming in here, right? Sweeping liquidity. I am expecting for this to run down here just to go back up, right? Or it could sweep the high, come right back down here, and then continue. That could also happen as well, right? Remember, this is a psychological base, not just a mechanical. We have to understand what's happening, we have to understand what's happening at each supply zone, both on a mechanical and a psychological base, okay? So let's see what happens here. Price sweeps. Okay, this is interesting. So this could have been an entry, actually, because not only do we have a sweep of liquidity here, right? Not only do we have a sweep of that, but we also have a sweep of this, which can also be a change of character, which could mean that this here can simply mean an entry for us to continue bullish. Now we could enter here, right? Now this is how you can adapt a structure too. You don't have to just wait for the main one down here. Okay, let's see what happens here. All right, there we go. See, do you notice what happened here? So either you can enter here, right, or here, right? But the main idea, right, the principle still stays the same. We had a swing low or a low come in, take out the liquidity. Prices broke again, right, to the highs. What do you call this? This is a demand zone, right? Price comes back to the demand to continue structure bullish, right? So this is one. Okay, so let's see. Would we have tapped this? Yeah, we would have tapped the high on this. No problem. So that would be the first one, right? So the next entry would simply be right here, right? So this would be TP1. Okay, this is still the demand zone, right? Right there. Prices can always come below this low right here because this is an internal low, right? So let's see if prices can come below even lower. Let's see. Okay, there we go. Notice how it comes back to that demand zone, right? To this demand right there. Now the reason why is because this is where the last demand took place, right? And this whole area here has swept liquidity. So there is a bunch of liquidity here, right? There's two buying demand zones here, right, where people have bought. Here's the next demand zone, right? Now, you don't have to just buy this aggressive. You can actually wait for more confirmation here. Let's see if prices can break the high, which is right there. We got the confirmation, right? There you go, right? So because this low swept liquidity, this is the next demand zone to buy from. We also swept liquidity here, right? And let me just get rid of that actually, right over here. Just get rid of this, put that back there, right there. So you could have either entered here aggressive or waited for the confirmation. We always wait for confirmation, obviously. All right, and your entry is simply right there, right? Let's continue. There we go. All right. Could look like something like that, right? Let's see. Boom. There we go. So let's go right over here. You can see over here, there's your sell to buy, right? Broke this high. That could be your entry simply because this is where the last sell to buy happened. Prices came back to this demand to look to continue bullish, right? So that could have been the other one. The third one was right, the second one would be right here because this is the next sell to buy, right? So that's what would happen, just like this, guys, right? So notice how you can follow each demand zone as a directional base, right? This is very powerful, just like this, right? Once we broke out of this structure here, actually it's this one right here, right? You can continue price bullish in this case because you can see here, where's the demand zone? It's right here. Now, why is this the demand zone? It's because we had a previous sweep right here, right? So we swept this low, price ran. This was the last sell to buy from this high. That's your entry. Boom, right? So this would be another TP, right? Okay, guys, I hope you guys understand how this works, how we use direction. I hope this video is very insightful. If you did like it, please leave a comment below and let us know what you liked about it, right? If you had any questions, go ahead and let us know, because we're always here to help you out. We love you guys, and we hope to see you in the next video.